think we do have the management of Akzo Nobel now joining in. So let's discuss the quarterly trends. The company reported a mute set of numbers. Numbers were slightly lower on account of course, the carve-out and sale of the powder coatings business. Rajgopal, Chairman and Managing Director at Akzo Nobel, is with us. Mr. Rajgopal, thank you so much for joining in. Let's start with the broad trends first. In terms of volumes, Q2 and beyond, when the sentiment turned around thanks to the GST cuts, I mean, what are you seeing and what are you projecting for the rest of the year?
Good morning, Surabhi, and good to be back, and thank you for having me on your show. Look, I think as far as volumes are concerned, the last quarter after the prior quarter was a strong quarter. We grew 3% in volumes. Remember that our growth, both in decorative paints and in our coatings businesses, largely come through premium. So I think one of the great things that we've seen, which is, I guess, slightly different from some of the other industry players, is the fact that we grew in premium. We grew mid-single digit in premium, and that clearly shows us that we are poised well. Where we've had an issue is really on the larger part on the mass economy, because there was heavy discounting and pricing-led actions in the market, and we chose to play very selectively there. We've come back pretty strongly. We also have taken some price corrections. Yeah, so I think from a volume perspective, I think we are now going to move to a high single digit. In the coming quarter, in the current quarter, we should be at between mid to a high single digit, and then go to double digit in the next quarter. That's the volume.
So that will take the total second half volume growth to
about a mid-single digit now, because the reason for that, Surabhi, is that if you look at the volume growth is largely coming from mass economy, construction, chemicals, and putty. And those are not the segments which have been our core competencies. Construction chemicals, we are just about to launch in the next month, in December. So hence, you would see a slight gap. But once we launch, we've tested our products. We do a lot of checks at our lab before we bring it to market, because we want to make sure that our products are of Dulux standards, and hence we've taken a bit of time rather than rushing in. But those are slightly lower margin products, and hence for us we need to also make sure that we are closer to market, because otherwise it's margin dilutive, right? So our entire infrastructure setup, etc., is taking time. But once we get in, you would start seeing the volume growth coming back to double digit.
Okay, all right. So what should margin look like then, for the second half of the year? Because there will be some benefits, sale of the powder business. You also have lower royalty rates as well. Give us a broad range, sir.
Yeah, so Nigel, good morning. So, just a quick one. First and foremost, you have to look at the revenue and all the figures net of the powder, the carved out business, which is powder, IRC business, etc. And hence, if you look at from a revenue perspective, we were down first by about 1.5%. Let me explain that. So I told you volume has grown for us. Our mix has not been hugely adverse. Our entire drop is on the price. And why? Largely led by decorative, because we are transitioning, as you know, to JSW paints eventually. So hence, I think the brief, and we are following the brief which we've got, which is to get aggressive and make sure we participate in every segment and drive top line. So the focus is going to be hugely on market share. But to your question, I think I would like to say our EBIT margins we will keep, as I said in the investor call on Friday, guidance between 14 to 16%, while we are aggressively focusing on our top line.
Since you brought up, the new Akzo, so to speak, with the merger moving ahead, just tell us what else is changing. So one clear, change in strategy or renewed push that we're seeing is that you want to be in all segments. The brief is, like you're saying, is to be aggressive. Give us some more color. What will that aggression really look like? And how is the overall competitive intensity? Very interesting times, because we were speaking with Berger Paints and we were talking to them about what the changes at Birla Opus really mean. I mean, the exit of the top executive there suddenly got the market very excited, thinking that the aggressive intensity from the Birlas is going to die down. But from what you say, I don't think it's dying down from the JSW group.
Well, look, I think, Surabhi, let me take the second part of your question first. Look, firstly, I don't want to comment about people. I think it's not right. We respect all players in the market, and I think that's the way we've been. Coming specifically to, do I see the competitive intensity slowing down? No, I don't. I think on the contrary, I see this going to continue for about a year. I mean, people, and this is, I'm not just talking of, the Birla Opus, but if you look at all the players who've come in, they put sizable amount of capex and money into the businesses. So we should expect competitive intensity to continue, at least for a year, if not a year and a half, is my view at this point of time. And so we are poised because, to me, I think it's important to have a ground reality of what it is. Yeah, I think, yes, there has been a recent trend of, of Birla Opus maybe in a month or quarter, but I don't think that's you're comparing to a standard which is, if you look at what they've achieved, is not small. And hence, we don't want to take, we take notice of every competitor and we don't want to sort of, let go right now. On JSW Paints, I think it's very important for Mr. Parth Jindal. I think it's more appropriate for him to answer once the entire deal closure happens. I think, and then perhaps after that, maybe it's appropriate for me to comment, Surabhi.
Okay, all right. Let's talk about your business then. Post the sale of the powder coatings business and the other smaller business, you'll have some cash, right? Some liquidity has come in. How do you use this money?
So we are going to use it to continuously drive growth. I think the focus has been, Nigel, to be consistent with what I've said in my previous interviews. We are investing behind our brand. If you saw, we just did a campaign on Lage Shandar, Chale Shandar. Remember that in 2021, we were the first player to actually bring this entire warranty into the market. But what you've seen is both the largest player and the recent challenger, both trying to stake claim by putting huge amount of monies on the campaign. Hence, I think our agency did a fantastic job with our marketing team. We said that, look, it's quality that delivers warranty. And we are very clear that Dulux stands for the best-in-class quality in paints, at this point of time, anywhere in India, if not worldwide, right? So hence, our focus is to bring that simple message to our consumers, and we are seeing some good uptake. The fact is we grew mid-single digit in premium. It's slightly different from the narrative that you've heard, maybe other than one player. So I think that tells you that's a testimony of the fact that we continue to focus on premium. You can continue to expect a lot of innovations coming in the coming months and in the quarters ahead, and both. And we are going to straddle across price points. We're going to straddle across the portfolios and start intensifying our efforts to start getting market share.
Mr. Rajgopal, thank you very much for joining us, sir. Good speaking with you, and good luck to you and your team. It's always great speaking with you here on CNBC TV 18.